Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, December 5th. Michael Boutros here with you this morning. We did just get the release of U.S. trade balance data, guys, coming in a little bit weaker than expected, deficit of 48.7 billion. We're expecting 47.5, so a slight offset there. But a very interesting picture today. We've got a lot to talk about. Things are weird, put it lightly. In a lot of hesitation, we've come into a lot of key levels on the markets, but we haven't seen reaction there. We're just sitting there, namely on the dollar index, Aussie dollar testing resistance, euro dollar sloped a little bit lower than support. We'll go over Kiwi. We'll go over the pound crosses, so pound dollar and pound Aussie from last night. Peter wants to look at pound Kiwi. Sure, let me write that down, Pete. New Zealand dollar. I would expect that's a little bit off today too. And Pete, one of the things that I've been a little concerned about today is how the pound is performing. As we've been talking in the intraday updates, we've been looking for the pullback, but I kind of wanted to cease right around here. So it's going to be interesting to see how today pans out, but we'll take a look at that. Also on the docket, Kiwi Yen, setup that we highlighted yesterday as well, Euro dollar, Kiwi dollar, and dollar CAD. That's what's on the menu for today. If you didn't hear a pair here mentioned, or if you have another setup that you'd like to review, any questions at any time, feel free to throw them on the message board. I'd be more than happy to take them. So let's get started. I just want to say a couple of things. So obviously, we're just opening up December trade. Non-farm payrolls are on Friday. We got BOC obviously on tap as well, but a lot of focus is shifting towards the Friday event risk from what I've been reading, and next week, which is going to be the Fed, the ECB, the BOE. Fed is expected to hike rates next week, so that's kind of cooked in the books already, but the language and the accompanying quarterly projections with the updated targets on employment, inflation, and growth, all that comes out too, so you get a big batch on Wednesday of next week. But some of this hesitation, my point is that some of this hesitation and all this event risk looming early in the month, into the last month of the year, you want to use caution here. So we want to tread a little bit more lightly. I've been very hesitant in a lot of these positions because, like I said, we've kind of just lost steam and lost momentum on a lot of these. So we'll go over these setups from the start. Let's jump right in. Here's what the DXY looked like early in the week. And again, we were coming into that 618 retracement that we rebounded on Friday once more. 93, 93.25 is sort of where I want to see hold as resistance. You have basic slope resistance there, a 3-point touch. Okay, the parallel extending off the low also caught the lows pretty darn well. And the emphasis on a break here. Okay, our broader bearish invalidation is still at 93.50, and here's what it looks like on the daily chart. So immediately heading into the U.S. Open, you still have resistance right here at that 93.30, 93.25 level. It's the 100-day moving average. Near term, obviously, that slope, you're kind of getting messy there, but the levels remain unchanged. And despite some of my hesitation and how the market's acting a little early in the week, kind of weird here, we still want to maintain discipline to our levels. So 93.50 is still going to remain our cutoff point. A break below 92.60. Okay, where we bottomed last week, this is what needs to unleash the next leg lower, 91.94 being the initial target. So the levels are clear, but again, things are kind of lightening up. Here's what it looks like on the intraday now. So you have your weekly opening range here taking shape right into this resistance range. We've kind of crawled out of this, out of this formation, and you don't like to see that. As I always tell you guys, when we see a break of a trend line resistance or support, I want to see acceleration. Right? I want to see the market react, a little domino effect as you trigger out some of those long positions, those weak long hands that get shaken out. So, look, we'll have to see how today's U.S. Open, forms out. I'm still not changing any of the outlook or updates. 93.50 again, still bearish invalidation. You have the low day close from 2016, level that we've been watching for quite some time, obviously. Still offering some support. So now that's also the weekly opening range low. Remember, just to fill the gap, okay, just to suffice that gap close, we would need to move down into 92.89. So I don't think it's outside the realm of possibility again that we should be looking lower here. Momentum flatlining ahead of 60, but again, not getting that whipsaw, not getting that break, that reversal off resistance that we've been getting. Okay, time spent is important. So, if this gives out, I'd be neutral on a stretch into 93.50, and let's look for a reaction there. But at the end of the day, you're going to have to respect what near-term price action says. All right, non-farm payrolls on Friday, at Fed next week. Still a huge, next 2 weeks here for event risk before you head into the thin holiday trading, which gets even worse. But pay attention here. Pay attention here. Hey, D, good morning to you as well. Any questions? Yeah, I noticed that after I sent it out, Eman. I'm so sorry. So she's saying, good morning, Mike. Just a quick notice, the Kiwi Yen full link report does not open yesterday's email. Felt I had to tell you. Thanks for letting me know. I appreciate it. No, I always appreciate it. Eman, it was on top headline for Daily FX for a while. Guys, I only give, I'll throw out things on Daily FX that are kind of just highlights, and I'll update that once a month or so on each pair. But, if it's there, it's definitely going to be on SB in even more detail. So I don't stress it, but thanks for the heads up. So watch the DXY, looking for signs of failure still. I was kind of looking at the 15-minute chart and the 10-minute chart right before the head of the webinar here, kind of see if we were looking for some signs of exhaustion since the weekly open. Again, just to fill that weekly open gap, still need a sizable move lower. So momentum has been stretching from oversold to overbought to oversold, not really giving us that downside bias yet. So we have to be patient, look for a break in the range. Again, favorably to the downside, but if we max out the highs, watch for a reaction at 93.50. Still cautiously bearish here. All right. Next up on tap is Aussie. So we got the Australian Reserve Bank of Aussie interest rate decision yesterday. It was interesting in that they were expected to hold rates. They held rates steady at 1.5%. Interestingly enough, you still got comments about strength in the Aussie possibly undermining the inflation target and really working against them. So kind of talking down the Aussie, even though we're well off the yearly highs. And here's what we looked like yesterday right ahead of the data print. They reinforced that they're basically no hurry to raise interest rates, but they do expect a pretty strong GDP print tomorrow, which is out of Australia. And they want to keep talking down the Aussie. Remember, lower, weaker domestic currency is always going to fuel that inflationary flame. So it's something that's going to assist them, aid them in their inflationary targeting. You saw Aussie obviously buck the trend, and that's kind of what happens every time these central bankers come out and try to talk it down. The focus is right here, guys, and we still, we have to keep our eyes on this basic resistance zone, key support, 74.75. I've been looking for a drop into 75 for a possible long entry. I've been telling you guys that for a while, but we haven't been able to do it, right? So we highlighted resistance yesterday. Basically what we're testing right now, this region right here is a daily chart. You have the 76.32 level. Again, that longer term 618 we've been watching. Last month's open, the median line all converge right here. That's kind of what we need to see hold as resistance. Listen, long term, I'm liking the Aussie upside. The focus has been what the weekly charts are threatening, and we've been talking about the fact that at the end of the day, we need either a drop into this beautiful spot to get long, okay, 75, 74, 75, this region right here, or a break above this region to really validate a more significant reversal in trend. Remember, momentum coming right into 40 here, basically, and reversing. Pretty nice spot if we're going to maintain a positive, constructive momentum profile. So I'm looking for either the pop through here and the pullback to get long, or if we get the final dump, if the dollar decides to pop off real hard, we're looking for, again, exhaustion down here. So until we clear this range, you want to be very nimble. And again, this is why I'm so hesitant. Look at this thing. Came right into resistance and pulled back like clockwork, right? Right off the median line. Doesn't get cleaner than that. Little overshooting our level. We want to see 76.45. We maxed out at 76.54 before turning over. So you just came off downslope resistance. Nothing to get excited about here yet. If we were to mount a bigger assault above this, and clear 76, 71, then you'd start looking reversal. Within this trend, you still have a lot of room before a 200-day moving average, and more importantly, the 50 line. So again, hesitation, gunshot approach, take a gun to my head. I think this thing heads lower still, a nice reaction off resistance. Ultimately, we're fishing for that low. Remember, bottoming processes can take months, can take weeks. Don't want to front run that kind of play. The trend is obviously still pretty heavy. We're looking for signs that that trend is reaching near-term exhaustion. Questions on the Aussie. Want to see resumption of the uptrend, but the question is picking the entries. Right now, near term, still looks like you could see another tumble lower before we move higher. But on an intraday basis, I'd still favor, buying pullbacks. Is basically the better play, I think, in Aussie. Okay, questions on Aussie. Strongest performer heading to the U.S. session, so, just another tidbit there as we head into U.S. trade. Next up, pound dollar, and then we had the pound Aussie cross. I thought that would be a pertinent move because if we did see the rally in the Aussie, I think pound Aus lower was kind of the play because pound dollar still looked kind of stretched. So here's what it looked like yesterday. I even said as much that I think this looks, basically still looks a little stretched up here. And here's what, the basic range that we were talking about. We kind of probed through it, dilly-dally just below. We didn't quite max into support. The bottom trend line here of this newly added formation that I put in yesterday coincided really nice with that late October high. 33.33 is kind of what we brought up our bullish invalidation level. So we're looking to buy dips while above 33.33 for a correction within this broader advance. So here's what it'll look like. Kind of teed off, okay? I had like an entry, I think, near 33.50 and change. Didn't even make it there. So it comes right back. Again, it's a broader uptrend. You want to pick and choose your targets. Even if you do get into long entries, remember what the ATR is on this. Okay, I'll bring it up actually right now because I want to remind myself. So you're looking about still pretty tight. It's like 60 pips. 55 pips or so. So the ATR is still rather tight. You want to be a little bit more cautious. Oh, I'm sorry. That's on the 240-minute chart. Something seemed wrong. Bear with me one sec, guys. Sorry about that. A 100 pips. That makes more sense. So a quarter of the ATR is about 25 pips on that one for an intraday scalp. Just to be very, very cautious because, again, came off a big level. 135.43 was the last target that we noted in the previous report. That was a 1618 extension off the lows. So it's kind of exactly where it teed off, came right back. Nice support bounce yesterday, which is why I put the focus on this with our bullish invalidation down here. So the immediate focus is on a break of this range. If we broke lower, expect a drop, but we want to stay constructive above that region. Well, sometimes knowing the levels is something, and actually being able to execute on them is something else. It didn't quite get down there before it really exhaustion just put it right back inside that range. So levels remain unchanged. Again, you're looking for a low to buy while above 33.33. Topside break above 35.43. You're looking for 36, and this is the big daddy right here, 36.58 to 36.75. Still key zone. Sterling questions. So with that outlook on the pound yesterday, I thought it prudent to put pound Oz because the sterling, like I said, it looked a little extended, looked a little stretched, a little tired. And to play that pullback as opposed to trying to take a long on the dollar per se, I just wanted to see if that Aussie strength could give us that boost into resistance on the Aussie dollar, which we got on the Aussie, and obviously put pound Aussie in a nice play as well. So here's pound Oz post RBA. Okay, and sort of the play here, to bring back yesterday's report, was the fact that you had seen a pretty remarkable 7-day advance. Now, depending on which tool you use, I was looking at this yesterday, and there's a little discrepancy on some of the the platforms. But to look at this on a weekly basis, okay, 7-week consecutive advance. You can bring up an indicator called consecutive days, guys, consecutive candle count. My colleague David Rodriguez from Daily Effects made this. There's a couple of different ones that were created, but this one actually pans out pretty well. There's a little discrepancy, and it counts this day right here, or this week of the 30th of October as a down day. It really wasn't. It was a fractional up, which you could just see obviously by putting it on the cursor. The open was 70.84.9. The close was 70.85.4. So it was higher. So if you take that into account, it's basically a 7-week consecutive advance. So last times we've seen a 7-week consecutive advance was right here, and that obviously saw a blow-off week before a larger correction. I'm not saying it's going to happen again, but when you're looking for signs of exhaustion, you look for these kind of indications to help you get a little bit more confidence, help you add a little bit more evidence to your thesis that we might be looking for a pullback here. And certainly after last week's close, we closed so far off the high after making that fresh multi-month high. I was looking for a near-term exhaustion. So you had 7 weeks of consecutive advances into the weekly open. On the near-term charts, obviously, you had a little bit more conviction in that you had a break below 70 right into the close of last week in momentum before this thing closed back below 78. So we allotted some room for the downside, 76 and even 75.38. I said, if you noted the report, I was like, even if we get down there, I would even allow a pullback that low before getting bearish on this. And it's basically because 75.39 completes a 100% extension off the high. So even if this is just corrective ABC pattern, that would complete the correction measurement, and that would also be a basic slope support here off the lows. Obviously, we probed through here on some emotional stuff last week. Here we are again. So we overshot it by a little bit, but a really strong reversal has me convinced for a nice little bounce off this region. So yeah, I'm looking higher off this. The play was lower last night into this target. So if you're holding any shorts, I wouldn't necessarily be comfortable with that for a while. Remember, Aussie's at resistance, pound dollar could slip a little bit lower, but broadly speaking, we're still staying constructive above that 33.33 level. So clarity in the levels, not so much in momentum. Not so much in momentum. So I do want to see this low hold into the U.S. Open for a topside play here. Initial targets would be just towards the opening range low of the week. 78, key resistance, what we highlighted early in the week. That's the level that held as resistance. That's the level that needs to break. Next upside targets, we're at the 80 handle, and then 81.60. Remember, a larger ATR here as well. A big swinging trade here. No? Sorry guys, a little bit of a glitch here in TradingView. Bear with me one moment. Ah, that's why. Over 1,000 drawings. That's always going to make things difficult. Okay. But I want to see the ATR on this. It's about 167. Not bad. So 30, 40 pips, probably where I'd be as far as an intraday trade type of strategy on this. But really, your risk threshold has to be against the low that we made last night. If this low holds, again, initial targets at the weekly opening range lows, and then right into that 70 to 790 level. Meaningful resistance up there. Questions on pound Oz. The only one that actually kind of made sense yesterday with the pullback lower into 75.40. That was the only welcome thing this morning, at least from my side of things. But this is why we kind of try to break it down and give you both sides of the play. So Inventive Aussie Strength, which I really wasn't interested in trying to play along near the highs here. I think the pound Oz was the trade there. So moving forward from here, that was number 4. Any questions on DXY, Aussie, Sterling, or Sterling Oz? Speak now or forever hold your peace. Kiwi Yen is next. That's number 5. Here's what Kiwi Yen looks like. So on this one, basically looking for exhaustion here, exactly where we petered at last night, 77.66 and 77.77. You had the November open. All right, fine. Basic trendline resistance, more convincing. 236 basic retracement, even better. Just look at the characteristics of the last couple of advances into this median line. Really strong reaction to the downside on each approach. So it's make or break here, right? We clear 77, 77 on a close basis. That's the monthly open from last month. You're looking higher. You're looking 78.20 just as an initial soft target. Okay, it's the former high from 2016 here. And then you're looking for big, big resistance up here. Not my favorite scenario. Initial kind of, shotgun approach. Right now, we do want to see this thing start to show some signs of exhaustion. Note that you have a near-term momentum trigger here. Again, on a daily close, I'll be watching this to see validation. If we push through and the momentum signature closes above this trend line, all right, got to play the long side. Got to favor buying pullbacks. But as it stands right now, this is resistance, plain and simple. He gave us a 240-minute chart last night. Here's the 240-minute chart now. Okay, so note that on this advance, we're seeing divergence in momentum, right? Price action making a higher high, the oscillator making a lower high. These real subtle ones are the ones that I love. Now, the thing I don't like is, again, a rejection of this trend line needs to see a little bit more of a turnover. The dollar is at resistance, so it's tough. It's tough to get bearish on Kiwi right here, but just know it's make or break. I'm looking for some sort of strong reaction here. It's a pretty tight weekly opening range so far, and monthly opening range for that matter. So the monthly opening range taking shape right below resistance. I like that. I'll let that sit out for a while. Look for a little bit more of a conviction hold here before trying to take, a short on this. But you are probing into resistance. We do want to see a hold here. Now, there's not really any RBNZ or any kind of major New Zealand news coming out of note. You do get dairy auctions, I think, today, which may be a little bit interesting for the Kiwi Cross. But in general, look for the dollar to really be a major performer here, especially with NFPs on Friday. The tax debate, guys, is another thing that the markets have been slowly crawling higher on. I'm not really necessarily referring to equity risk markets. If you look at S&P and Dow, they're obviously continuing to close at highs every single day. But there seems to be a much more pretentious, cautionary tone coming out, and you can see it in the intraday price. So, I think markets have sort of priced it in. If there's some sort of upset or there's an interruption where it looks like it might fall off, look for that to impact markets big time. But if things all go as planned, things look pretty steady as far as just kind of a steady grind higher for now. What that means for Kiwi Yen, well, you're at a make or break level here. Okay, 77.77 breaks to the upside. I'm out. I'm just going to, you'd look for a rally at least in 78.20 in that kind of scenario. It's another 50 pips to the upside. Questions on Kiwi Yen? Make or break. Look for resistance here. It's number 5. Okay, next up is Euro. Excuse me. Again, acting a little funny. Here we are heading lower, so I'm guessing DXY just popped through or is making a run through. Okay, so the Euro, obviously the level that we talked about, 78.88 into 18.05, that's our near-term bullish invalidation level. That's right here. If you break below that, you have the 100-day moving average, you have the high-day reversal close that we made on the 15th here before breaking through. You have long-term slope support, all converging right there. That's my bottom line. That's also 100% extension. So similar to what we were looking at in pound Oz, 2 equal legs down on just a correction would take you as low as 1788. Lo and behold, that's the level that we've been watching on the daily charts already. Weekly doesn't really look all that convincing. Again, there's that same median line that we're looking at on the daily charts. So you can see a scenario where we touch that again, maybe probe a little through before rebounding. But what do you do here? Are you going to chase this and start selling against the highs? Looking for a stretch into this region? Not really my style. Not really my style. So looking for some sort of exhaustion low, a drop into that 77.88.18 level for euro. Questions here. NFP on tap, Fed on tap, ECB on tap. It's going to be a big 2 weeks for the euro. Next up, if there are no other questions here on euro, here's Kiwi. So, holding resistance, we filled the gap that we noted on the weekend on the Sunday Open. So that required a move up into basically the 68.90 level. We came as high as the median line. That's exactly where we petered out last week. It's exactly what we're turning from right now. Momentum solid at 60. So I like it lower. Momentum not really trying to turn over. It's not able to turn over on the near term time frames. You know, I was looking at this. As soon as I kind of peeked up this morning, this bounce that I saw here got me concerned. That's the low day close from October. It's the initial kind of weekly range highs, broke through. Now we're sitting at a resistance. Look for this consolidation break. Now we're getting real near-term in price, guys, but this is kind of how you want to execute in this environment. Look for this consolidation break, okay? I favor a downside break. Like I said, it's hard to get constructive key dollar at this point, but if it breaks down beyond here, remember, this thing is up against major support, the yearly range lows, 2016 open. You know, the emphasis is still on a break of that key support. So any shorts you take, any shorts I've been taking have been so super nimble. And as soon as we start even approaching, you know, down below the 68.50 region, you kind of just want to bail out. It's not even worth it trying to hold it. If we get the break, great. I'll jump in again. I'll find an entry somewhere. But just know this is a critical region. We've probed through it. Last time we probed less. You know, it only comes to figure if we come through it again and do inevitably bounce, you'll get even a lesser cut, maybe even a turn ahead of it. So, you know, a lot of these trades just kind of stuck right now. Pooja, hey Mike, sorry I got here late. Did I miss QEN? Hey, no problem, Pooja. Don't have to apologize to me. We did just do QEN. Did you have a specific question on it? Let me just bring it back real quick for Pooja here, guys. Bear with us 1 sec. Here's what it looks like, Pooja. So we're basically looking for resistance right here, 77.77. Whoops. That's what I want to see hold as resistance. You saw momentum divergence all into the highs. The near-term charts don't really, well, let me take that back. The real near-term charts don't have us on anything necessarily extremely pending. This was the signal on the high stretch into resistance on divergence. That's going to be your strongest pull. This rebound here comes right at the weekly open, essentially, Pooja, which is why, you know, I get concerned that you see a little bit more of a bounce here back towards the highs. This is your weekly open. Objectively, you know, aside from what anyone thinks, Mike Boutros or Jamie or anyone, it's the objective open. So you do need to get through that. You do need to get through that, but I do like it lower against 77. All right. Quick recap for you there, Pooja. Let me know if you have any specific questions on that. I took a short at 77.60 in Asia, but got stopped out at break-even. Ooh. Okay, where was your stop on that? 60. So if you remember, 77 was the bearish invalidation level. Trust the levels, guys. If you get stopped out on a level break that we've been watching, I never feel bad. It happens, especially on the pound cross. Like yesterday, pound Oz. Obviously, we're looking to catch the low in pound Oz. It got lower than we expected. It probed much lower. But when you see the market reaction like that and you see price speaking, you know, it's okay to just jump right back in if you do get stopped out. But on the Kiwi, it was really on the Kiwi yen, it was really kind of a perfect hold just below that. So look, at the end of the day, Puja, look for a break below the weekly open to get this thing going. Stay nimble. I was telling everyone in the room, markets are kind of really weird right now for some reason. I don't know if it's because of the tax debate that's going on, the ongoing crisis with the geopolitical nonsense, or, you know, obviously we have the non-farm payrolls, Fed, ECB, BOE all next week. I don't know if things are kind of just teetering out right now, but if I look at this objectively and take a step back, I'd be looking lower. I'd be looking lower. All right, so that was Kiwi. That was number 7. Dollar CAD. So here's what the good old loony's doing. We've been talking about this thing for too long. The turn, we discussed that yesterday in the webinar. I hope you guys caught that. If not, you know, this was a big region. Our call here on SB was looking for a fade opportunity from either 29.27 or that 200-day moving average. You turned ahead of it, okay? The high day close and the monthly open from last month held right into the close of the month. And literally on Friday there, you covered the entire November range. So this is a November range break to the downside. Does kind of shift the focus lower, okay? Here we are at long-term trendline support dating back to 2012. And I'll take you back to the weekly charts on this because you've seen this before. And here's that slope. Same slope that gave us this parallel. Same slope that gave us this parallel. Obviously, you're looking for the touches. Resistance, break, saw acceleration, perfect touch of support, break, saw acceleration, back to that slope. Break, saw acceleration, back to that slope. On both sides, here we are, support. So remember, the major support range or the break for the validation for the continuation pattern is still going to be that long-term 200-day moving average. It's a little bit lower near 2560. Also, down near 2560 again, you're going to have the 100-day moving average. Since that was the 200-week moving average I just showed you on the weekly chart. It's the 100-day moving average. Also, these former swing highs. So again, that's the level we need to break to validate the reversal pattern. And in such a scenario, a basic double top measured move takes you down to 2422. Lo and behold, that's also the 618 extension for the broader decline off that 2016 high, 2415. Okay, so really nice target if we're able to make it, you know, below this nonsense. Near term, immediately, you could see a little bit of a hesitation here with the way that markets are moving right now and the lack of momentum. I wouldn't be surprised to mutter sideways to higher, but at the end of the day, that's the focus break we need to get that final run near 2415, 2422. Intraday looks like this. I presented this slope to you early in the week on the open. I didn't really know if it was in play. I'm getting a little bit more confidence on it just because of the way we've been acting on it just over the last 4 hours. You know, we closed basically a rebound right off there. We gapped higher into the open. We were looking for resistance on Sunday up here. Never quite made it. Breakdown's been pretty heavy. But when we finally did clear it on the break, you know, basically since last night in Asia, that same trend line has been resistance. Okay, so support bounce, messy, support bounce, instant resistance, resistance, resistance. Keeps me basically focused on 2665, and I think we're going to see a test of that. If that breaks, you know, let it drift. It'll probably go back to the opening range highs for the week, if not the median line where we initially wanted to get in, and we'd have to reassess there. But you know, I wouldn't be interested again in jumping on a short side dollar CAD necessarily here. The target ultimately that we did want to see, again, 2590 on the near-term charts, that's the top end of that support range. Okay, it's basically also a 38.2 objective retracement. This is the broader decline. Show you where that's from. excuse me, the broader ascent off the actual range lows for the year, 38.2, and then there's those swing highs that you're looking at on the daily chart. So that's sort of the big region we need to see break. Still try to press shorts into it, but you want to pick and choose your entries as best you can. So at this point, you know, a slope, if this thing rebounds, entries against the weekly high is really the most you're going to want to try to press this to see if we move lower. If we do break the weekly highs, that median line, like I said, you could see a rally back up into that 618, back into the August high. We'd look for re-entry on the short side in such a scenario. Okay, look for a little bounce in dollar CAD, ultimately still looking lower in the pair. Questions on the loonie? Okay, that was number 8 and covers everything on my list. So those are the setups that we've been highlighting since the start of the week. Pete had a question on Sterling Key. Pete, let me take a look at what that's doing right now. Wouldn't be surprised. Okay, this guy, right. So we were tracking this earlier in the month, or earlier last month. Start to worry about the efficacy of this slope here. Bear with me one sec here, Pete. I want to try to get this for you. I haven't looked at this recently. So here's the thing. Objectively, you'd look for support near 93.86 or 93.84. Whatever. What is that? 93.84. That's a former swing close low that we made back in 2015. It's pips off of last month's open, and that'd be the initial support target. The only thing that would put me bearish here would be a break below 1950 or 190.50. Excuse me. That's the thing that would change things for me. You got former swing highs, basic slope support, and it's been a level that we've been watching anyway. Let me see. You know, the momentum divergence also is not very encouraging. This is the same picture with all the Sterling crosses, guys. They just look tired, but we need to understand they're coming off of pretty major breakouts. So, you know, I'd rather look for the bigger pullback to get long on this. Let me take a look here on the intraday chart. Okay, so there's obviously we've been watching that slope. Wow, just off those two, just off those. This is when we derived this slope, just off of these two lows. Nice splitter there. Resistance, support, acceleration, resistance. Got a little messy there. Resistance, resistance, resistance. Raised ceiling shows exhaustion. Let's see if this was a measured move of sorts. Whew, perfect 100% extension tag and rebound. That's sexy. Okay. Now we're getting somewhere here. Hold on. What did we say on the daily chart? Okay. 91.67 in near-term price shows a bigger and probably more prudent bullish invalidation for now. I haven't been following this as closely, so Pete, if you're involved in this one, that's the thing that would kind of shake me out of any long exposure. Right now, the bounce that you're getting off of the support is ideal for this to be a hold. It looks too clean for comfort, to be completely honest with you. Usually if things are that kind of right in your face, a lot of times I get shaken out, but that's exactly where you would have wanted this pullback to hold if this is still can stay constructive. So watch 94.23 on your downside on any long exposure. Obviously, just an objective weekly opening range break puts this thing back into focus. 99.95 is the next bigger target. It's a broader 38.2 retracement from the decline off the highs in 2015. Long range retracement. And it coincides in the median line over the next couple of days here heading to the close of the week. So that would be basically here. And over here, you'd see that reflected right there. I guess I should start deleting some stuff so my charts stop locking up. But Peter, does that help on pound Kiwi? He says, just wanted to know where it's heading. Thanks. Yeah, interesting pair. Interesting pair. I'm not sure when we lost focus with this. It's probably after that failure to break the opening range last week or last month. Kind of got me all frustrated. But it's a sterling cross. Kiwi's flirting with disaster. If you finally get that break below support in Kiwi, pound Kiwi's a pair I'd love to be long. I'd love to be long on Kiwi weakness. I'd like that. But you got to watch for this thing to finally give us that downside break of 68.30. Make sense, Pete? Okay, that is number 9 on the session. He says, yep, all right. A quick review of the, Iman, can we take a look at dollar yen? Yo, yes, is that not on the list today? Oh, goodness, where's my head? Number 10, absolutely, yeah, dollar yen. Well, I can probably see why I don't want to cover it, but remember this thing broke our bearish invalidation level last week, guys. It was 12.28. To be exact, I don't want to misquote myself. Yes, 48. So that was the level that basically we wanted to see hold as resistance, okay? We not only probed through it and slammed lower, but we gapped above it to open up the week. Inherently, and again, this is not something you want to take as a carte blanche, guys, whenever you see it, and certainly I know I can tell you a million horror stories of people who just, kind of run with this strategy, but when you're in a play like this and you gap higher, markets will tend to fill that gap, especially if that gap is on a breakaway of the direction the market might be heading. So we cleared resistance or basic downslope last week. We came and found support while we probed below, right there again. Gap higher, you'd think you get the gap fill and then you get the pullback. So we missed the gap fill by what? 12, 16, basically like 17, 20 pips maybe before turning higher. Remember that the stretch into 13.25 was the objective on that break. So I still think it does get up there. I hope it doesn't. We know that Jamie's looking for an entry near 1270. So that puts you guys in basically right now. His stop is at 113.10, which is basically just above these highs. So I hope that's right. But really, on an objective break higher, that 13.25 level is pretty mounted up heavy on this. So if you're not in yet, try to see if you can get a little bit of a push higher here to get your entry against that stop if possible. That's just as per my opinion, guys. Obviously, we're going to stick with the swing trades. If you're moving inherently with the swing trade strategy, we're going to want to make sure we're not altering this. But on a sideshow type of move, that's sort of what wouldn't be outside the realm of possibility. Now, things we have going for us. Well, obviously, there's been some pretty strong divergence all up into these highs. Price action made a new high almost on every other candle. You can see it clearly, the zigzag motion here. Boom, 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 boom. Oscillator making a series of lower highs. So the exhaustion is there in the momentum signature. And obviously a gap fill would be perfect for just a move just lower. 1190 would be ideal. I love Jamie's target there. It's an ideal scenario for where this thing could find some support. But the levels, again, you're unchanged on the week, guys. You're virtually unchanged on the week. Here's the open. When you give us the invalidation level, is that the close basis or just when the level gets breached intraday? It's always going to be on the close basis of some premise, Kevin. So you don't necessarily need to wait for a daily close. If I'm looking at a 4-hour chart, or for example, again, I'm going to bring your example back to pound Aussie because that's a perfect example of what you're asking about, right? Our bullish invalidation level was 75.38. You kind of look for the closes, yeah. If intraday, you don't really want to stress it. So if you look at the 120-minute chart, even the 2-hour never broke. 60-minute chart, you broke it by what? 8 pips. Markets don't work in a vacuum, Kevin. So yeah, it's pretty much you always want to stress a break of a major support or resistance level on a close, on some given close, because you get these obvious spikes where an intraday sort of shocked the market. Obviously, the perfect example was last week's, revelation that Flynn did all this and whatever. You saw the markets tank 300 pips. You want to get washed out on a move like that. So when you're attentively paying attention to your intraday trading, you do want to wait for the close to invalidate a bias that you're looking at. Kevin, let's say in this example here, we're looking at the 60-minute chart, right, for pound Aussie, and I saw this break here, and it closed. Okay, a 60-minute candle, Mike, dipped below, and it closed. You say that that's, bearish invalidation level, so I'm bearish now, right? Correct. But Kevin, we have to wait for the market to give us the entry. So on that close, if this was a real hold, I'd want to see resistance on a retest back of the high day close, back at 75.38. The fact that the next candle not only reversed sharply but closed above the previous one, that's an indication that that's a false break. Exhaustion move, quickly recovered back below 30. So Kevin, you number one, again, it's not a black and white thing, right? If you're coming into resistance and intraday, you're kind of trying to gauge whether you're going to get the whip back or not. This is the kind of stuff you look for. Go deeper in price. Look to see it close below. If it closes below, look for the rally, even on an intraday nature, to find resistance where you would want it to see, former support. And then look for the momentum signature, really confirm that things are still dire. If this thing was still in oversold condition even on this rebound, and we held at 75.61, that would have been the entry for me to try to press it lower. But the fact that momentum quickly on the next candle recovered right back above 30, and then this thing cleared and closed back above the high day close, next double down, this is actually an entry to play the rebound for the long side. Kevin, does that make sense? Kind of bringing it a little bit more near term. He says, gotcha. All right, cool. Right on. Okay, so that is pound Kiwi we covered, dollar yen. Any questions on dollar yen from here? Eman, does that make sense on dollar yen as well? We're looking for exhaustion. I should say I'm looking. Jamie's looking for the same exact thing. We're looking for exhaustion. You're unchanged on the week. The weekly opening range, at least for the initial Monday, Tuesday stretch, seems set. Downside break here opens up 1120 is just or 1190 just as a sort of an initial target, I think. But ultimately, I still have resistance a little bit higher here at 1325. Iman says, yes, I hope also that it does not run higher. I'm in a short exposure for that extreme hated pair. Yeah, right. It's a love-hate relationship. I'd say mostly defined by hate, but yes, there are some times, Iman, where things are super clear in dollar yen, and it's always a surprise to me when you see that. The only thing, if you guys remember back here, even I got bearish dollar yen. I never trade dollar yen. And that was just because there was such a compelling case here. Divergence into the highs, the parallel that no one was watching, caught all three highs. The break below saw that parallel as resistance. It was a perfect move. The break of the monthly opening range here finally dictated and supported that bias. We basically stopped our bearish call basically as we headed into this congestion region of these moving averages. It stretched into the 50%. Great. The rebound here, finding resistance along this trend line, is kind of the idea. It's kind of the idea to look for a move lower. So we'll see if we can't get that to hold, to get that drop in dollar yen. A quick run through on the commodities. Here's what it looks like. Every time I trade it, it was like a missile in the air, which put the equity in negative. For dollar yen you're talking about? Yeah, you have to just recognize the pairs that you're messing with, man. I'm a, you know, I respect these markets way too much, so I'm fully well aware of dollar yen and the implications it can have on your account. As you guys have probably, for those of you who've been here for a while, have heard my story with dollar yen. I was one of those guys who was fighting the dollar yen drop from 130. And I was fighting that whole thing down into the 80s where I finally gave up. Lo and behold, 77s, a little bit lower kind of bottoms, right? So remember, the markets can stay irrational way longer than you can stay liquid. And, it's that respect, that humility for the markets that really kind of changed the whole picture for me. So, yeah, it's dollar yen. That's why I call it the abomination, Eman. Let's see if we can't get that hold at today's high, or this week's high, rather. A look at gold. I just wanted to highlight this thing's coming into the final or the major support target that we've been highlighting over the last couple of weeks. That's 1263 and 1267. It's just the bottom of this godforsaken range that we've been in for nearly 3 months now. So watch it. Okay, it's basic slope support also off the objective range lows from last year, the low that we made this year in July. That trend line converges on the 200-day moving average and the 618 retracement of the advance off that July lows, as well as the broader 38.2 retracement of the entire advance from last year's low. All of that stuff lines up 1263, 1267 in gold. Now, add to that everything I just noted from a technical standpoint, from a Fibonacci consideration, from a moving average consideration. The objective range lows for September, for October and November, all lie right here. So if we break 1263, guys, in my humble opinion, again, I think it's going to be a straight shot into 1240, 1246, and this is our broader bullish invalidation level. If gold is able to make it below that level, guys, it changes the entire picture in my humble opinion. You have the 52-week moving average there. Just below that, you have the 200-week long-term moving average. And again, those Fibonacci considerations would also necessitate a break of this upslope. And it would spell trouble. It would spell trouble. Okay? A correctionary 100% extension would take you all the way down to this region. That's at 1207. So that might be the larger correction that's out hand. I don't think it is, but if it is, what we would need to even suggest such a move would be a break below 1240. Right now, on tap, as you look at it, you're coming into support. 1263 is where I'd look to close any short exposure. I'd look for a reaction there in gold prices. All right. Questions on gold. This is going to be big this week, guys. It's definitely going to be big. Remember, on whole, okay, just looking at things on whole, static, tax cuts would typically be actually bearish for gold. Tax cuts would stoke more inflation, which would give the central bank more leverage to be able to normalize policy at a higher rate. That means that we do get the 3 to 4 hikes next year that they're saying that we're going to put in. The markets are only pricing in 2 essentially. The Fed dot plot still suggests 3 to 4. So it really depends on where the inflationary picture comes in. Now we get the NFP numbers on Friday, which does include wage inflation numbers and wage growth numbers. So we'll be looking at that as a gauge of what the Fed, may or may not lean in their language on Wednesday of next week. They're definitely going to hike. Again, interest rate expectations are still above 99% essentially as far as next week's interest rate hike is concerned, but the emphasis will be on the quarterly projections. So if we get the tax hikes, if we get the tax cuts, or that conversation moves on, and we get a little bit even a slightly more hawkish Fed next week, you could see 1263 break, and that's what would change the picture for gold. All things held equal, you're at uptrend support. You're at uptrend support. So not a time to start getting bearish on gold by any means. A close below 1263. Then we're talking. Then we're talking about a different scenario. But as it stands right now, you're testing the range lows. Questions on gold prices? And that's number 11 on the session. Okay, we made good time today, guys. I got through everything on that list. If you guys have any other questions, at this time, feel free to throw on the message board. If not, um, we will go ahead and wrap it up here. We'll be back on tomorrow morning, again, for a recap on all these setups and see if we can't get some division, more decisive, play in some of these trades. Remember, the major focus is really on these dollar crosses, on whether this, is going to break the 93.50 bearish invalidation level. Euro heading into 118. We're looking to see a exhaustion low into this region. Watch those key levels today, guys. If you're not involved in anything, I don't blame you. Keep your powder dry until we get a little bit more clarity. Major event risk on taps the first week of trade for the month. And again, you have all this headline risk that I think markets are paying way too much attention to. So keep your trigger finger ready, and we will update you when needed. Guys, have a great trading day, and I will see you all tomorrow morning. Cheers.